bringing you lights, camera, and action. A brand new show every Wednesday at 7 p.m. only on Awaz Entertainment.
Hello everyone, this is Kubra Ali and you're watching my show Lights, Camera and Action. Good evening to everyone and I hope you're enjoying the month of September. The fall's near and the schools have started. I hope the kids are enjoying school as well. So as you can see in every episode, I get new guests with me. So tonight we have a new guest, very interesting guest who does life insurance with us. So we have Akil sitting with us today. Hello, Akil. How are you?
Good. Thanks for having me.
Thank you so much for coming on my show. It's my pleasure. And so, Akil, tell me, where are you from and when did you come to Canada?
Originally from Sri Lanka.
Okay.
And so came to Canada in 2002. I'm counting my days, but I forgot counting after 10 years later, so it's become part of it.
Okay.
So I changed my career. I went to med school. I was a medical student when I come to this country. I went to university and college here, so completely changed my career from medical to finance.
Okay.
And now I have another company, technology company as well, technology startup. So now in the tech as well. So complete change of the careers. Yeah.
Okay. So when did you start with life insurance?
So I joined Sun Life in 2007 while I'm in the last year at Ryerson University.
Okay.
So it's almost 15 years now.
Oh, nice. So, are you engaged in other financial services as well, like mortgage brokering, mutual funds, etc., or no?
I'm mutual fund licensed.
Okay.
So what we do is we look at clients in a holistic way, 360 view, and a whole plan, and then we say, okay, you know what they need. We have a referral partners that we work with, accountants, lawyers, and tax planners. So then we will actually refer them according to the need. Yeah.
Okay. And what kind of life insurance policy you recommend to your client?
That's a very deep question.
Okay.
So this is not only you, like whenever I go to different places, they always ask, oh, this is whole life is good or term is good.
Yeah,
or
I think your client question is this, like every client want to ask that question.
Yeah. I'm glad that you're asking because, I always say to them, the insurance is good the time if something were to happen, like either you're buying a life insurance, it's death.
Correct.
Health insurance is health about critical illness or disability. Has to be active at the time of the event. So that's a good policy. So what we do is we look at, I have a 3P principle, if I may allow to say. So I always look at, okay, you don't buy what you don't need.
Right.
So you only buy what you need. That's number one. Number two is you look at, okay, what's your need? Is it short-term or long-term need? So you buy according to what you need. You don't pay too much money to insurance company unnecessarily because you're all working hard and making money, right?
Absolutely.
And then you have to structure the policy in the right way. And then don't go over the budget. You have to know what's your budget because you have to buy something today and it has to be available, able to pay if something were to happen. So you need to buy what you can afford as well, right?
Right. So how much life insurance is needed?
That's another brilliant question because every client asks the questions and the insurance company also look at how much insurance we can give it to these people.
Okay.
So the way we look at it is a formula. There's an actuarial insurance company, they calculate if somebody making 100,000 income, 25 times or 20 times of the income. And at the same time, the health insurance also they have a formula 5 times of your income. But I go back, doesn't matter how much the formula is, you look at what you need. Let's say, for example, I'm married and have children. If something were to happen, how much money I need immediately pay off the debts and the mortgage and all the things that you need.
Okay.
And then if I have kids, how long the kids need that money. So we need to do the calculation. And then how much money I need to, if I live 100 years, how much money I need to leave.
So it's all about the needs.
All of the needs. So how do we calculate? We have a software. We use Blue Mind. It's a software that we developed in-house and then we marketing to others. So we use the software to calculate exact need of your need. So something happened today, then it will give you how much permanent life insurance you need, how much temporary you need. So you buy, you build a plan according to that. Don't just pick the number from somewhere, right?
Okay. And how much coverage does a person need if they have children?
Again, normally when we look at today's world, if you're on, I know your audience in 30, 40, whatever the ages are, we're looking at, and the mortgage is like, if they have a mortgage, and that's another big thing. Children with mortgage, you're looking around $2 million. And if you're looking at 40-year-olds getting a term insurance, $2 million, it's going to cost less than $100.
Right.
But the funny part is, if the person is 30-year-old, it's going to cost them half the money, $30 compared to the. And then again, one thing I always look at, don't look at the price of the insurance, really look at what you need rather than price.
Okay, it's all about the needs.
Exactly.
Okay, and what is the best type of policy?
Generally, in terms of all the research done in every part of the world, permanent life insurance or whole life is a good part, like a policy that pays dividend. You participate with the company profits as well. So that's good because the coverage goes over the time and cash value is there. However, like if you have only term need, temporary need, you don't buy whole life to manage the term insurance.
Right.
So, but because it's there for a long time and you can actually pay short time, 5 years, 10 years, even shorter than that, we can customize the plans.
Right.
So the whole life is really good. But again, it's really depend on the need, as I mentioned before.
All about the needs.
Yes.
So, okay, how does this type of policy meet the needs and circumstances, like whatever you're saying?
The whole life, yeah. So the whole life, we look at in 3 different buckets.
Okay.
Like one we do most of the time is children, because we spend so much money for the children, and people start thinking after they have a children, I want to do best for them, like a best education, because we came here as an immigrant, most of us, then we want to build a better life for them. So we don't want the kids go through that suffering. So then we always put the RESP, the Education Saving Plan. And then we spend other monies in different places, but we forget to build beyond that RESP, another pool, which is a whole life insurance comes in.
Right.
We have all of our children, they put in, so you don't need to manage that money. That money actually insurance company managing, and it's grow compoundedly. And the kids are younger, then have more time to grow this money. That's number one. Number two, the families, they want to build a bigger estate to the next generation.
Right.
Like if you look at Canadians and Jewish people who've been here for, they use that policies to actually build a bigger legacy. For example, the McDonald's, and the Disney World. They use that policy even start their own business. They have cash money, the money in the cash value in the policy, they take the money to start the business.
Correct.
And the third and final, high affluent individuals, people who make a lot of money, a lot of business, then they need to find ways to tax efficiently use that money. So then we actually work with high net worth, ultra net worth, high net worth individuals. We use it as a tax strategy to reallocate the money from the insurance, their own company, business, to build another wealth in a different way. So
nice.
It's kind of work on all 3 areas.
Okay. We have to focus on all these 3 areas.
Yes.
Okay. And can you provide them with some alternatives or options as well? Or?
Yeah, absolutely, because that's very important. Like when the clients come, I think the first thing what we do is we understand what is the need and objective.
Absolutely.
What is something they know and what's something they don't know, but we know based on the things that we deal with, same kind of clientele. Based on that, we tell them, hey, this is what you need, this is what will cost, this house look like, and then we give them additional options. Okay, if your budget is not right, or things going to change in the future, let's work on these are some of the alternative options. As I mentioned before, you don't pay something that you don't need, because a lot of people, they buy, my cousin have this or my uncle have this. They just buy as a transaction. But what we do is, I'm part of. It's
all about your needs.
Exactly, needs. And then you buy what you really want for your life situation, right?
Absolutely. So will you provide policy illustrations to your clients as well?
Yeah, absolutely. That's mandatory, actually. Every time that we do. One other thing, Life Plan Investments, which is my company, we are a very advanced and technologically advanced company, and we boutique and also have an access to all the major companies. Always we transparently give the information, how this works, and also explain them, because sometimes it's so many different pages. So we actually, even during the COVID time, we adapted technology very early stage. So be able to provide them in a simple way, they can understand these illustrations to how this policy works.
Make them explain and understand. Okay. And will they receive copy of their application? Or?
So copy of the application most of the time when they apply for the policy and when they approve the policy, it's actually attached to that. Because this is one other thing I wanted to bring to the audience as well. Like a lot of people think that, it's okay, mortgage application and this application, that application. But life insurance is one of the very important one because it's a contract between you and insurance company.
Okay.
And if something were to happen, you have a promise. They promise that they're going to pay it. So it's very important document that we need to keep it carefully. So the application is part of the policy as well. So then it'll be part of the policy.
All right. Okay. And can the death benefit and premiums be increased or reduced at a later date if the personal situation changes?
Absolutely. That's very important. Increase is a very tricky question. Decrease, yes, of course, you can decrease the face amount. You can decrease the coverage amount. You can decrease things. Also, not only if life changes, I mean, you need change. You can decrease. You don't need to pay too much to the insurance company.
Right.
But when it's come to increasing, what they will do is most of the time, unless you have an option to increase buying future insurance, they would ask you to do medical questions, medical test, exam. So you have to kind of go through one more time of medical parts to get to additional increase.
Okay. And can children be insured under the policy?
Absolutely. Companies has multiple ways to, because one thing that you need to know is most of the policies have a policy fees.
Okay.
So instead of you buying every simple policies there, you can actually consolidate and buy all the policies in one.
Oh, okay.
Children insured is one of the extremely important. I worked with Sick Kids as an advisory board before.
Nice.
So we see that. I mean, why Sick Kids available? I mean, because we don't want our kids to be sick. I have kids.
Of course.
I don't want the kids to be sick, but we need to have a right protection, right insurance for them as well.
Yeah. And how much does it cost, the life insurance policy?
For the children, remember I said saving plan, you can pay off
plans,
in 20,
different plans.
Different plan. But the one we love and one we think is really important, the saving plan that we paid up in 20 years will cost 100,000 coverage, which grow up to millions of coverage later. That'll cost $100 a month.
Oh, okay, that's not
which is
bad.
roughly $2-3.
Yeah, you spend you go to restaurant, spend eating with more than 100 once, right? So
think about the McDonald's and other things that we buy for them.
Of course,
it's a garbage, but it's still we buy because of the pleasure.
So, but this is important, right?
Yeah.
And does the policy provide living benefits?
Yeah. So that's a really good question because we have people always ask, okay, you know what? Oh, this life insurance, can I get if I get sick or if I get disability, can I get? But unfortunately, when you buy car and home insurance separately, life insurance always have to buy separately.
Okay.
But that's a really good question because some companies, what they do is they have, when you buy Virgin mobile phone, then you get other perks, right? So then similar to that, some companies, what they do now, they give you low wills and power of attorney. They give you money for scholarship. They give you orphanage benefit. So that we have an access to find the right companies to give that additional benefit to the clients.
Okay.
Even the kids will get a scholarship in some companies and online will and power of attorney. So, and beyond that, if somebody terminally ill, we had situations during the COVID time, couple of clients, they were affected by the first wave of COVID, and then they don't have any other health other benefit.
Yeah.
And they're in the ICU, the doctor said he's going to die, and then insurance company actually advanced the money from the death benefit. They paid early. So insurance companies very good because they've been around 150 years, most of the companies. But you had to do it in the right way. If you do it right way, right policy, you will get all the benefit what you need.
Okay.
Right.
Thank you very much, Akil. We'll take a short break. And let's take a short break and we'll get back and talk more about the investment policies with Akil. Thank you very much. Welcome back. And we are talking about life insurance with Akil and we'll continue talking about it. So, Akil, I have more questions. What life insurance benefits are guaranteed?
The guaranteed most of the time, most of every insurance is something happened, you died, and they pay the money. So one of the tricky part is first 2 years of the insurance coverage. If you don't, knowingly make a mistake or frauded can anytime they can challenge. But if you knowingly make mistake first 2 years, then after that it should be covered. Okay. And the funny part, even somebody suicide after 2 years, it'll be covered.
Oh, okay.
So that benefit is covered. Then in the whole life policy, there's a guaranteed cash value, regardless of whatever that happened, insurance company must pay to the client if they need it.
Okay.
So the guaranteed cash value in some policies are guaranteed.
So I wanted to ask you, when are the returns expected? So is that, you want to say about the, like you said, the cash back?
Yeah, the cash value generally the dividend. So what basically his work is, you investing in a stock similar to that, like you investing the premium you're paying more than normal life insurance policy.
Yeah.
The other extra money that you pay is invested inside the different part of insurance policies.
Okay.
So what they do, they give a dividend. So mostly 5.5 to 6% dividend. The funny part is, even market is down like 30%, 40%, the dividend is actually not going to go down. So they normally have a smoothing technique, means every year they've been paying dividend. So one of the companies that we work with, they've been paying dividend 145 years. First World War, Second World War, all the financial crisis, still they're paying even during this last recessions. Because they have a reserves money in the policy, in the pool, and they know that how the investments works and very conservatively invest, so they're actually able to pay that. And one other beauty of this dividend part, once they pay, let's say you have investments like 100,000 inside the cash value, that won't go down. It's not all the policies, some of the policies, whole life participating policy, even market crash, the money won't go down. So because of that functionality and how this policy works, so we, as I mentioned, we work with some advanced cases or high net worth individuals. They, let's say, pay for 50,000 for 10 years or 100,000 for 10 years. They're able to take a financing even to the premium they pay, 100% money. So like, let's say I'm going to pay 100,000 for next 10 years. I don't need to pay from my own money. What I do is, I will need to qualify all the tax planning when is everything right. So I pay the premium, within a week the money, the bank that we working with, that will give the money. So you're really paying the interest of the premium. So that's very advanced concept. It's only for the certain and right people. But again, as I mentioned before, it's all about the needs. What they need and what the right situation for them.
Okay. And what if the health changes?
So that's a really important part. Like, I mean, you know that everybody hate car insurance going up, even though we drive good and we do claim for the home. I hate to do that. I mean, my car insurance, home insurance went up like recently. We don't have any claims.
We don't expect it, but
exactly. So the beauty of life insurance, every year, like normally you get older and you technically, your body deteriorates, you become older, you become bad. But the insurance part is good thing about it. They do the medical, the time of application, right? So then if health changes or things change, it's perfectly, nothing going to affect you, right? And sometimes what happened, I work with the clients, their health become better. Like they quit smoking and they had a medical situation, they will not control and become control afterwards. So then we go back to insurance company, say, can you review this, their coverage? Can we actually do it? They actually did. They get even lesser premium afterwards.
Okay, nice. And what if there's a more needed, if they need more coverage?
That's happened all the time. People buy, when they come to Canada, they buy small apartment,
and then
condo,
they need more.
Bigger house, more children. So you always need to do it. So that's why you need to work with. So one thing I noticed, everybody go and try to get plans, like a just transaction. But what you really need to do is you need to understand why you're getting, you need to plan. At Life Plan Investment, we always say plan, build, and protect. So you need to plan what you really need in your life today and the future. And based on that, we need to do. And I'd like to say to your audience, one of the things that I use as a certified financial planner for the clients, every dollar you bring, 15 cents of that dollar should go into your investments and insurance. So you don't put on the 15 cents all to that insurance. You actually need to work with the planner to put some part as insurance, which is a defensive strategy, and the investment to really build a retirement and future plans.
Right. And I would like to ask a few questions about the policy now. So what type of policy is this, the one you are working with?
The one we mention all this time is called participating whole life policy. So it has, again, as I mentioned, there's two different type of policy. They usually do it for a long-term benefit to build more value of money. So that shouldn't be only the option for the clients. Normally, when we look at a client, we look at a holistic planning. Do they have investments in the real estate? Do they have an investment in the stock market?
All about the needs,
mutual
like you said
funds.
before.
So then we actually plan it out and do it. But what the beauty of it, these plans, when we do it, their money actually going to get either when they're live or when they're not there. So the guarantee they're going to get more money than what they paid. So that's a guarantee, because also death is guaranteed, like it's unavoidable. So then eventually they're going to get. But we build that plan not when you get the money after you die. We actually plan it out. You can actually get the money while you're alive, or even to the retirement, or whatever the cases are. As I mentioned before, McDonald's and Disney, they build it for business, right? Yeah.
Right. And what is guaranteed in the policy and what is not, like including premiums, benefits?
Most of the time, the premiums are guaranteed. Most of the policies, like permanent whole life policies, and also guaranteed that you paid up in certain number of years. Again, we have a lot of good financial advisors, insurance agents in the market, in the country, in the community, everywhere. But don't just rely on their words. Make sure that's written in the policy. That's extremely important, because some of them are assumptions. You have to really know, is it a guaranteed paid up in 20 years or 10 years or whatever the number of years.
How much time it lasts, the policy?
Again, if you buy term insurance, it's only for a certain term. And then what happened, the price goes up, like most of the time 4 times or then 9 times goes up. So it's mostly unacceptable amount. It's like it's not an affordable amount. It's going to be crazy amount increase. So you really need to know how long your coverage is there. Understand the policies. If not, contact the right licensed advisor, proper advisors, or contact us. We can definitely help you understand what you have.
Right. And are there any exclusions?
Some policies, very good question. So some of them, like let's say for example, people talk about mortgage. We have a lot of people buying houses. They get a credit insurance and mortgage. There's a really good article on CBC Marketplace, like a few years ago, like almost like 10 years ago. They talk about this post underwriting. So some of them, they actually take the premium and they don't do any medicals. They only do the medicals the time of the claim. So those are the things you have to be careful. And then also some of the products called accidental death insurance, they have a huge exclusions. Like if you happen this and this, you don't get claim. And so you have to really understand the exclusions. Most of the exclusions comes like when you buy disability policies or a health insurance policy, some of the exclusions will come if you have some pre-existing condition as well.
And are there benefits from the policy subject to income tax?
Very good question. Generally, insurance is built or insurance started before even the income tax law comes in. The first insurance policy is issued. So, but anyway, there's certain income tax plans there. But good news is insurance benefit as a death benefit or the health insurance benefit as a critical illness, that's generally tax-free. You don't pay any tax. So there's only few things in Canada tax-free, like when you have a first home, like you're tax-free, and when you win the lotto, it's tax-free. But after that, if you invest, then you have to pay tax. And TFSA is tax-free. But the insurance is one of the big benefit is tax-free benefit to the clients.
That's so nice to hear.
And then normally, let's say when you have assets and things, once somebody passed away, it has to go through courts, and sometimes it's getting so messed up if they have issues with few marriages and challenges on things. But the life insurance is more confidential. Like let's say somebody have a beneficiary, you and you, somebody else. You will get the money. Nobody will know how much you get and what they get. So it's really the person who owned the policy can decide how they want it, money go, and that will go. And we actually paid even claim outside of country. The people, beneficiary, they live in outside of country. We actually able to pay the claims outside the country as well.
Nice. That's nice. And, is the death benefit adjusted for inflation? Can more insurance be bought if needed?
It's another good question. As I mentioned before, when you're looking at how much money you need and everything, you have to be careful about, sometimes people buy, I want to pay off the insurance in 20 years, 10 years, but they don't think, if they're buying $100,000 today, let's say you're 25 years old, you're buying $100,000, what is that going to be in 20, 30, 40 years down the road? Inflation is one of the important things. I mean, we are in the high inflation, historical inflation right now. The inflation is important. So that's why you have to really look at how much money you need to grow. So there's 2 different type of policies. Like when you buy whole life, that's actually adding that insurance policy over the time, so that money will grow over the time. So it's work against the inflation or is mitigate the inflation risk. The second part is universal life. Is another policy that you actually invest inside the policy in the mutual funds or sec funds or index funds. You invest some part of the money go into the premium, covering the cost of the life insurance, versus go into the investments. You advise and you can decide how you want to invest.
Right.
Then again, that policies also can be paid up in short time, and that can actually, the money invested will add it to the death benefit. So it'll grow over the time.
Over the time,
Yeah.
okay. And how is the death benefit paid out? How long does it take?
Normally, interesting question in most companies that deal with. We had a guy, he's Punjabi, he passed away after 3 months of getting a policy. Because he doesn't have a doctor and he doesn't have a family doctor, he's divorced, so family doesn't know the details.
He had health issues, or it was a sudden death?
So 3 months ago, he got a policy and he's okay, like completely okay. He went to gym and he's single, so he's living with his parent. And then he went to gym and come back, and I feel pain. And then he took Tylenol and went to bed and didn't wake up. That was like during the Christmas time. So we look at it as one of my advisors' client's policy. And she worked with them, and we had to really take a little bit time. I think it's a month because family doesn't know how he is, and he's traveling to Toronto to Montreal. So it's very complicated. I'm talking about the complicated situation. That took a month. But most of the time when I give the claims, when we submit the claim, within 5 business days, normally they do. And with COVID, the insurance companies actually become more advanced. Before, we had actually sent original death certificate, original forms, but they actually accepting certain things in a more faster way, digital copies and things. So it's become more faster. But generally speaking, more, like a 5 business days, more or less takes if it's complicated case. And if somebody young and something happened, passed away after a few years of something in the policy, then you may need to take a little bit more time because they want to do investigation if it's a larger policies. But generally speaking, what I saw, most of the claims I submit and get within maximum is 5 business days.
5 business days.
Health insurance, criticalness claims, and even life insurance claim. Yeah.
Thank you, and we'll take a short break, and we'll be back after the break. Thank you very much. Hello everyone, welcome back after the break, and with us, Akil is sitting. We are talking about life insurance with him. So let's get back to him. Welcome back.
Thank you.
So Akil, I have a question. What happens if there's a separation or divorce?
That's a very good question. So in theory, when people buy a house mortgage and they say, oh, we want to get mortgage insurance. And then they say, okay, if something happened to me and I want to get paid to my spouse, and some spouse had something happen and pay to us. I don't know the exact number, but I think it's more than 50% of the people get divorced in today's world. So when they, theoretically, they're supposed to put the policy called joint first die. When there's a policies, joint policies, it's become really harder on the time of divorce. So generally the court order, and especially even sometimes we see that we recommend when we working as a financial planner with the client, like if they get divorced and something happens, if child support is paid by the parent, one parent, then if something happened to the parent, we want to make sure that continue to get they have money coming over the time. So there's a whole bunch of planning around that divorce part, because that's one of the tragic life event, unfortunately. So definitely need to be planned. So that's why I always try to keep individual policies, like individually, so it's much less messy.
And that's possible?
Yeah, absolutely possible. And also when things happen and when there's divorce, the policy can be separated out. But again, this is sometimes tax consequence there, but you really had to be important. But when something happened in divorce, and always think as a, you know, how things going to move on for the future. And one of the most important part on the life insurance policy or any other policies, health insurance policy, whatever, there's an owner and whose person is insured and who's paying the premium. Always we think, oh, person who's paying the premium has a right. No, absolutely not. Person who is the owner of the policy has a right to put beneficiaries and change things on the policy and everything. So what happened on the divorce side? So let's say they get divorced and they look at the policy. Let's say the bad person is who has the owner of the policy, he can change this beneficiary anytime. So you need to really work on understand the policy, who's the owner of the policy, who's the beneficiary, what happened, and certain things.
Okay.
And certain part, like they put beneficiary, they call revocable, irrevocable. It's a term. Simply said, one beneficiary you can change anytime without anybody's positive permission. The owner can change. The other type of beneficiary, you had to get a permission from the spouse or whoever that person is. They get signed and then change the beneficiary. So those are the things that very important, why you need a right planner, right advisor to help you navigate your situation.
Okay. And what documentation is needed to make a claim?
Normally what we do is we send them when death claim happen or even health issue happen, we call the insurance company, the claim department. There's a dedicated claim department from most of the companies. Then we send them, they will tell us, okay, what do you need? Most of the time what they need is the form need to be filled out by the beneficiary, who the beneficiary is. And then we need the original death certificate from the person. And if it's a medical thing, and they will need to know who's the OKIP number and the family doctor and what medications they take, and they have other policies, all that need to be filled out in the form. And if they have a multiple beneficiaries, you need to have a separate beneficiary form because nobody should know what other people are getting, right? And most of the time they benefit. And then when it's come to health insurance, disability or health insurance claim, they would look at APS, means attending physician statement, doctor's report, simply. So insurance company will send the doctor's report, give the doctor's report, which is including all the medical notes, sometimes all the notes, or sometimes particular information they ask from the doctor. So all depend on the severity and the claims.
Okay. And is there a medical exam needed to purchase the policy?
Very good question. So there's today's world, especially after the COVID, insurance companies, one insurance company actually increased up to almost $5 million without medical. If you're young and healthy, you're at 30 to 50, you can get it. And some company up to 3 million, 2 million. Like they are competing each other to get the business because with COVID, actually things change. Not only the COVID, actually the modern advance in medical, people live longer nowadays. They get sick, except the COVID part. So they have, but what I always say, as I mentioned before, the insurance company, this is a contract between you and the company. You don't want to make any false mistakes and knowing mistakes. You need to disclose properly, as you would say to the doctor. So always there's a medical questions there. That's called non-medical insurance, no medical. If you get cancer or diabetes or whatever, you can get insurance. Yes, that's true. Because there's some companies, they ask medical questions, but you still need to go through each word and understand the question and answer correctly. Otherwise, there's no blood or urine test. So those ones will come back at the time of claim. They can go back to check the doctor whether you said right or wrong. But at the same time, most of the other policies, big policies and things, they do the medical upfront. That's why I mentioned if anything health change later, you don't have to worry about. So sometimes they do the medical exam, and if something is wrong, let's say for somebody had a heart attack or somebody had a medical issues and different things, they would go back and ask the doctor, give us the detail about this with the person permission. So that way, so they have all the information up front, they make a decision on it.
Okay. And what happens to the premiums if there's disability and cannot work?
So that's very important because sometimes what we do is they look at life insurance only, but you have to look at the whole picture. Because you go to work every day, that's how you actually bring money home. What if something, death is one part, it's covering life insurance, death only. But if you have a disability waiver in the plan, actually you don't have to pay the premium. I had to pay a claim to one person, that's my first claim in our community. I paid, that was like almost 15 years ago. This person has a disability waiver in the policy. He worked in a garage and something fall on the ice and then he couldn't work. And then because he stayed home and he get depression, he didn't have a disability policy to pay monthly benefit. Only what he did is he stopped the payment and he takes some money from the cash value to use it. But he has to feed 2 daughters and son, and then it's not easy, and wife didn't go to work, so she stayed home. So it was challenging, and then he passed away, and then later on. But the insurance company claim paid because he have a disability waiver. But some policies, if they have a disability waiver, is paid, But most of the time, my personal opinion is not the good option, because sometimes that's to claim and prove that is a little bit harder. And sometimes you have to wait for 6 months to even that kick in. So always I would look at, if you're working in a good company even, there's a disability coverage is there in the company, but you also have to look at, because there's a limitation on the disability coverage. There's $2,000-$3,000 they have maxed out in certain things. So you need to really look at, if you're making $200,000, if something were to happen, how much money I need to run the family. So you need to work with not just the life insurance, but other areas of your life, especially when people think they work in a good company. I have a group benefits. Company can change anytime, and they can stop any benefits. And then the third part is they have a clauses inside the group benefits that you have to work your specialized job only 6 months or 1 year. And if you can't do any other job, then you're going to pay or reduce pay. So these are the things, technical part, I would say, cannot explain more in here, but definitely need to talk to a right advisor to do it.
Okay. Thank you, Akil. And it was nice asking you questions, but now tell me your journey into this. How did you start it and everything?
Absolutely. It's my pleasure to give that audience understand. I mean, education is important, right?
I know.
I went to med school because I always wanted to help people. And when I come here, and I did international business program. That's a 3-year program. I finished in a year and a half, and went to Ryerson University. Did business management and finance. During my life year, I always look for right opportunity, and I have offer from Scotiabank and Edward Jones and Sun Life. I decided to start in Sun Life. I enjoy helping people part. I love sitting down, planning for their life, planning for their retirement, planning for the kids' life. So I enjoy that part. So 5.5 years I built that. And then I decided to move into management to teach people how to do this. But my secret is because I built a very successful practice. I don't want to keep it myself. I thought I will just do it. One of the things I always say, if I'm a doctor, I can only help one patient at a time. But if I build a hospital, I can treat so many people. Absolutely. So then that's the reason I went into management and trained a lot of other people. And then in 2017, I decided to resign from my high-paying corporate role and start Life Plan Investments. So you can see lifeplaninvestment.ca. So we are technologically advanced and providing unbiased. We have access to all the major markets in the company. So we're providing unbiased advice through our advisors and our systems. We license in Ontario, BC, Alberta, and Quebec. And we plan to expand the rest of the country. So we provide the business via online, in person. So we work according to the client's things are. But always come to the thing is putting the client's interest first, their need first, and their ability to pay. So we design some custom plans. We work with the family market and also ultra high net worth market. Interesting story, during the COVID, we build a technologically advanced, we build our internal systems. So when the COVID hit, so we actually, on March 20th, I stay home and then realize one of the things I care about is clients' privacy and confidentiality. And then we realized how people are going to be using the same computer for Zoom, shopping, and looking at the news and the client's information. So we said, we actually build a system keeping the client's information encrypted and safe in a cloud base. So then our own system, we actually decided, okay, let's take that to the global, that product. So that's a Blue Mind, that's another my tech startup. So that actually helping the financial advisors managing end-to-end with the clients. Also compliance and CRM and all the things are built in with that. So this is my journey from medical to finance and now in tech as well. Nice,
very interesting.
Thank you.
Thank you very much, Akil. It's almost time for us to end the show. And thank you very much for coming. I really liked your answers, and I think I enjoyed. I know my viewers also enjoyed. And also, if you have any questions, anything, the website and the number is given on the screen. You can always contact Akil and talk about his insurance investment and go on from there.
Thank you so much for having me, and thanks for listening to us. And if anything, let's help you to get there. Thank you.
Thank you very much for watching us. So I'll see you back next week with another guest. Until then, good night.
Hi, I'm Kubra. I'm bringing you lights, camera, and action. A brand new show every Wednesday at 7 p.m. only on Awaz Entertainment.